Good morning, everyone. All right, let's see where we are at today. Well, let's review yesterday. Things ended up pretty much exactly to yesterday's pre-market script. We had the consolidation day. We expected prior to yesterday, markets would get through this area, and if they got into the void, they would go up, and they did. And we talked about the overhead resistance, and it was likely to stall things. And after that wide range bar, the normal movement is a neutral type of a go nowhere day, an inside day. The inside day would have been the ideal, but we had some additional strength come in, which you could see here, and then it evaporated at the end of the day. So the markets went down. They went back up to resistance. They rallied, and they came back in again. So now we've got this day where we've got the body at the top of the range, which is just fine. Right? This is what we look for, exactly what we look for after a wide range bar coming off of a low like this. It came into resistance. The reaction was typical, historical. I say it would have been better if it was just an inside day, because now we've got, some traders that bought the move up, of course, anticipating it would continue to move up, and then it didn't. And it came back in, but as you're looking at this, realize that it went down first. So what happened yesterday? The market went nowhere. It just went sideways. Just envision this on a closing basis. It actually went down a little bit, but it's within our parameters of where any corrective action should stay. Right? So we just put an arbitrary 50% to say, look, if this wide range bar is so powerful, it should stay in the upper half and ideally in the upper third or so. So a consolidation day is just what we would have wanted. I mean, if it would have shot up like that, okay, fine. But it wasn't likely to happen. You've got this little resistance area here. You've got the 50 MA. We're looking at the Spiders S&P 500. We've got the 50 MA and we've got the 200 MA. They're converging there. So theoretical as to moving averages converging is that you're going to have a stiffer area of price resistance. Well, this is part of what you have to realize about the typical analysis that is applied to things like this. Good morning. Is that moving averages are subjective. Trend lines are subjective. Fibonacci lines are subjective. Anything you're going to put on your chart is subjective. We say that prices aren't, because other than changing time frames, you can't manipulate them. They come from an exchange. They're plotted there. Nothing you could do with them, but in a sense, you could change this into a bar chart. Of course, you could change it into a range chart or some other type of chart to massage the data, but the data is the data. Okay, so the way we do it is we recognize that these widely followed moving averages, the 50 and the 200, that's why we use them. They're simple moving averages. Be that institutions follow them with a very broad view of, okay, there's support and resistance, that if prices are below them, that is bearish, and if prices are above them, that is bullish, and if the 50 is above the 200, that's bullish, and vice versa. Okay, so while they're coming together like that, they're going to view that as this is a very important area for the bulls to get through and for bears to hold. Now, is there really anything to the left as far as price? So from a master trader point of view, that's what we really are interested in, because if there isn't, it's what we call a void. And those subjective reference points, even though we use these as subjective tools, moving averages, really are not as powerful as they could be, let's say, if they were in alignment with this area here, because now you've got real price, right? in alignment with those moving averages. So looking at this 250, 276 area, right, we see, well, it bounced from there yesterday. That's right where the 200 is. The 50 is at 277, 50-ish up here. And let me get into it. And there's this little shelf right there. And one of the things that we spoke about the other day was, how concerned should we be with this little area here? And I said, well, I'm going to recognize it as a price congestion area. The fact that prices came down, they went up, they made a new low and actually survived and made this bottoming process here. I simply look at this like this is a big guy and that's a little guy, and the big guy is going to be able to get through the little guy, right? So, and my little simple analogy there is that's how I look at an area of resistance versus an area of support and say who's going to win, and then see the actual price action that occurs there. Yeah. So now those moving averages being aligned with little to nothing, assuming prices can get through this area, we should keep going up. Now, what do I want to happen today? You're not going to like this, but I'm kind of hopeful that we're going to be bored to death. And what I mean by that is another consolidation day. And we talked about this yesterday at the end of the day. And I would still be even okay if prices were to poke down under yesterday's low, as long as the troops come back and buy and push it back up into the close. Exactly, Andre. I'm looking to build an area of support here. And I don't know, Alex. I'm just saying I would be okay with that little blip to the downside as long as it holds. And now the tail, we're going to assume it's a tail, it can break the 50% mark. I'm just giving you food for thought. I don't know what's going to happen, but I know patterns. Right. And it could be like a bull flag. Yeah. And not really. A bull flag would require more bars. What I'm really looking for is what we call a 1, 2, 3, 4 pattern. Right. So hang out in the upper half of this again. Show a close that buyers are confident into the weekend. And then next week, we make the attack on the overhead. Now, we've got this retest pattern here. We've got the gap down. It tried to go lower. It gaps up. We've got this sloppy pattern down here of bottoming. And then it shot up strong. Powerful bar is just that power. And on the retest, that says it's going higher. So where it is right now, very normal, especially with these moving averages here. But what I would like, again, to build that base, looking at the hourly chart, we get another day of going sideways here. Right? We've got the poke down. I don't know if it'll get tested, but building another base, or what we would want to call a new launching pad to go through there. So when it hits here, there'll probably be some jiggles. And ultimately, we're looking for prices to get through the high of this W pattern and be able to move up there. Spider already above most supply. Well, it is right here. Absolutely. That's, the hourly chart. We're above here. And so it backed off of the 200, right? It got close. It backed off. And now we're looking for it to build up this base. And you already got the swing low, a pivot. So it's created one reference point of support, pre-market here. It's starting to make another. Someone could argue as I'm looking at this, well, Greg, what if it's a head and shoulders top with that breakout failure? It may be, but if it pokes down here, like I'm talking, and the troops come back and battle back up again, the head and shoulders, theoretical head and shoulders top failing. Anytime you get a head and shoulders top, whether it's an hourly chart or, if it's a higher time frame chart, it has a bigger implications, but it's bullish. It's just like a topping tail that fails. A head and shoulders pattern here with this strong move up into the void fails. That's a signal to go long. So And this is what I'm hoping for. But we get some more consolidation, building that base, and we attack this area next week. What we don't want is a close down here, because then we're just back into the garbage. So, we're always objective. We have two scenarios, even the one that we don't want to happen, just to keep ourselves honest, so to speak. Okay. And we've got a lot of the same stuff, moving average in a different place. The Qs had a bigger correction. But the depth of this retracement here is bullish. It cleared that resistance. Same kind of picture here. Looks like we came up off of the lows there. We'll take a look at the futures. Russell looking good. Right, another consolidation day, a little sloppy and action going on here pre-market. But overall, the bias is, as long as we stay above this green bar, and ideally in the upper half of it, whatever's going on intraday is noise. Do you want to trade the noise? It's part of your plan. That's fine. Intraday traders can do that. If that's your focus, that absolutely can do it. But, do it intelligently. Know what the big picture is saying. Have an objective plan, money management. Transports showing great relative strength. That began last week by not going lower like everything else did. And now they've cleared this decisively. They've closed above the 50. And well, yesterday, it's still above the 50, kind of poked below the 200, but the inside day, and here is the ominous death cross, right? The 50 under the 200 that is supposed to predict a crushing bear market collapse, yada, yada, yada. More BS from the indicator-based mythology followers, okay? This looks great. It's a positive for the market. You've got those other patterns. We need to see this follow through. And the Dow, same story. Well, that's above the 200, the 50s there. So, we look at all of these and we see how they're reacting. We measure relative strength and relative weakness to assess what's going on. So there's the futures. And you can see so far we've just got an inside day of a narrow range day. And exactly what's happening is it's building up some consolidation. Now, I don't really want it to poke under here. Maybe I do, but it's got to come back. And the reason I would be okay with it poking under here if it comes back is because some people's stops are going to be under that bar. And that could be the right thing to do. I don't know that it won't keep going down. But if it comes back, it's going to help remove the potential sellers, which would be overhead supply, as these attack those moving averages, with little to nothing to the left there. Qs, right? Inside day, same story. And I meant to hit the Dow there. Come on. There we go. Same thing going on. Bullish consolidation at resistance. Price is going sideways after creating a move up, which creates a void. There's no support now. What are you going to trade against on a pullback? Well, some people might say the 200, if it went down there, they'd buy it. We don't want it to go down there. Ideally not. We want to see corrective kind of day, hang up here. Let's come in next week and get this moving higher. Bonds up a little bit, nothing, just slopping around. Oil been smashed, doesn't look good. Even with the green day, it can't show any strength here. Well, that's good for the transports, and you can see it's kind of inching lower here as we speak. What we do not want to happen long term, right? Whatever is happening here short term is whatever it is. I think we go up, but what we do not want to see happen long term is bonds push up here, because that is what's going to really foil this market next year. Is that if you see bonds pushing up and interest rates going down, the yield curve is going to get close, or at some point maybe even invert. And then months from now, you're going to see the big bear market really come. So that's something that we'll be keeping an eye on. It's not going to happen this year. I think it doesn't happen that fast. But into next year, as to the possibility of a recession and a big bear market where stocks will be decimated. Right? Maybe the markets could have a 20, 30%, who knows what, 40% correction. It's happened before when that's happened. But if it should happen, selling short will be shooting fish in a barrel, because it's always been that way. And so while we don't rather not see that happen in the economy and all that, it is part of the business cycle and it happens. So but we have the tools to monitor that. Gold just flopping around, doing nothing here. And one thing I did notice, I mean, Dan's going to cover some stuff with gaps, but I noticed Goldman was down again. And it's just some negative stuff going on there. And
yeah, I got downgraded.
Goldman got downgraded?
Yep.
Well, I guess that's not too bad of a reaction for a downgrade, but you know that there's some bad stuff going on there. It's always been underperforming. So, all right, that's it for me. Take it over, Dan.
All right. Good morning, everyone. Yeah, I forget the reasons, but it has to do with their involvement and, you know, bad mortgages and things. And the Fed might even be starting to research them or something. Yeah. Hey, Cliff, Andre, everybody. Happy Friday. Yeah, I'm also predicting kind of a nothing narrow day here, but even if we can hold the strength, that's a good sign, because there will be a lot of nervous traders into the close saying, I don't want that weekend risk. So if we close at these levels or higher, that's a contrarian good sign. And being Friday, you all know what I like to do: sell calls or puts. We'll see if we can have a bias at 10 a.m. and sell naked calls and puts and put our stop in and just move on. We added a number of trades yesterday. Spider, we have a put spread, IWM, put spread, IYT, put spread, and this looks like a directional over the high. That's a beautiful 1, 2, 3. Look, resistance, resistance, resistance. That's for swing trade. Preferably we want it to hit on Monday. That looks fantastic. CRE, it looks like it's gapping down here, and we have a covered call, and I put a note in yesterday saying, you know what, I came close to sending an alert to close it into strength, but I looked at the pattern and I said, because we're short the 44s, and so we were capping our gains, and I said, no, just let it get taken away at 44. Well, guess what? These prints looks real. So in retrospect, we're giving up some money by trying to squeeze out the remaining. But it still should be at a gain because we've sold 2 sets of covered calls. Papa Sierra, we had a put spread yesterday. I did not get filled, so it's still an open trade. I'm seeing the futures weakening a little bit here on the pre-market charts. So we're going to be in definite chill mode here at the open. Facebook, we did a put spread for next week, way out of the money. RTN, we did one yesterday, way out of the money for next week. SCI, we have a directional, looks good. Moss, Greg, this is the one we only have a half lot, so we need to, I think over yesterday's high now, it's finally shaping up. You know, it's not a picture of beauty.
Well, I'd rather it have an inside day and then do it next week.
Yeah, let's do it Monday. Yeah. What else? Chud, CHD, we have long stock. And I think I got them all. CTRE, I'm watching from yesterday. That looks great. I'm going to put that in a window. It's beautiful. Relative strength, consolidation. AMED. kind of went without us. Run, yeah, that was a great trade the other day. I've been watching it to see if we can get a pullback. This cold, this one we did. This one's been it's been an open alert for 2 weeks now, and these two tails over here hit our desired range, but at the time it hit it, I was kind of concerned of the broader market. I never triggered it, but it's still holding up strong. Let's look at some gappers. HLF here from yesterday. Nice close. Let's watch it for an intraday. PAGs, ugly, ugly gap, 22. Maybe 30-minute low. PAN W. Yeah, it's up more here. When I saw it this morning, it was right around here. 179, 180. Now 184-ish. Yeah, it kind of went too far. SFM, Sprouts, is not having a good day. But look, it's gapping here, 24 bucks. That's excessive. Yeah, Greg, I see your note on RTN. I answered them, and yeah, the stop is proper. Yeah, somebody asked me about the stop on this. And so we have a way out of the money, 167.5. Do you all see the low of this right here, 169.06? I didn't want it. Well, two things. This was too far away because that's 165. I didn't want to get blipped by a few pennies. So the stop is, and sometimes I do, 168.98. And then I added a dime. So that's the method of my madness of why I have a stop of 168.88. And so a subscriber just emailed me saying, "Is that the right stop?" And I explained that it was. VNE 32.50, nothing to do there. We'll come back. Marriott having a bad day. 30-minute low. It could fall for $4 or $5. Let's come back to it. Tick, big old gap. Kind of looks like a penny stock. I don't like trading those. Goldman, that's ugly. Look at this wide range igniting breakdown on the monthly and weekly. Ooh, AMD's not having a good opening minute. X here. Actually, the Tasty Boys, I saw this in their email. They're selling I think way out of the money put, January, maybe 50 days to expiration, whatever. And it's not ready yet, but I'm going to put it on my watch list. It's still in a nasty downtrend on the daily, weekly, but look, 20 bucks has nice support here on the monthly, and the premiums are really high. And that's what I like, the high premiums, but we need a pattern, of course. All right, SCI is fine. These were SEDG was a 1, 2, 3 that a subscriber sent me yesterday, but I don't like the deep retracement now. Workday had earnings. That's a gap and go, nothing to do. Splunk, it's a gap after a multi-bar move, nothing to do. I like this one. Kind of a gap down engulfing. It's for day trade.